after the company saw a 52% increase in profits, aided by higher interest rates. But while current rates provided JPMorgan a lift to its bottom line, CEO Jamie Dimon warning in this morning's earnings call of the risk of higher rates for longer.
There is a risk of higher rates for longer, and don't just think of just the Fed funds rate, because I think you should. For our planning, I'd be thinking more about it could be 6, and then think about the 5 and 10 year rate, which could be 5. And I think if those things happen, I'm not saying they're going to happen. I just think people should prepare for them. They saw what just happened when rates went up beyond people's expectations. You had the gilt problem in London. You had some of the banks here. People need to be prepared for the potential of higher rates for longer. If and when that happens, it will address problems in the economy for those who are too exposed to floating rates or those who are too exposed to refi risk. Those exposures will be in multiple parts of the economy. So now, I say to all of our clients, now would be the time to fix it.
Good for Jamie Dimon pouring a little cold water on this bank stock rally here. I think this is a very rational, well thought out thesis by Dimon. You see the market rewarding a quarter of higher rates impacting profits. But I think what Jamie Dimon is saying, hey, well, you know what? If rates continue to rise and we may get another rate hike at that early May Fed meeting, that is going to have a major impact likely on the economy. And maybe we're having this conversation 6 months from now, talking about third quarter earnings that are in no way as strong as the first quarter.
Well, Jamie, Cumulus Dimon has continued to be the storm cloud, or at least the meteorologist here in the economic framework that has continued to say and downgraded, thankfully, from the hurricane that he was calling from.
I kind of like the hurricane. It was kind of fun.
I mean, it was
a good headline.
It was a good one. Yeah. But, I mean, this is a clear acknowledgement of them not being in the camp of a no landing scenario. And quite frankly, in their earnings release, they had talked about versus a hard landing or a soft landing scenario, either one. Both of them are going to impact rates and loan growth here. And so, with that in mind, and all of the customers that they do serve, whether that be on the wealth management side or whether that be on the consumer community banking side, all of them should heed what Jamie Dimon is saying on this call, because in one facet or another, it's going to have a major matter, or at least a factor in the decision as to whether or not the bank chooses to do business with the small business or the mid-sized business or the individual who's looking for that loan for a favorable term, which they may not get.
Well, if there's anything positive here, Brad, rates are unlikely to reach 15% plus. As my parents bought a house in the early 80s. So, we got to keep it positive. It's Friday.
It
can't be all storm clouds and rain,
I mean, what were houses back then?
Well, not as much as they are now.
The price was like $120,000.
Today, you fly planes, so that's very exciting.